Hi, welcome to Neppy Invest. I intend this video to be fairly brief, short, because I'm in between night shifts and I don't have much time. So what I thought I'd do for a quick video is, last week I did a video about my holdings within my long-term growth portfolio, and the intentions were I was going to track the performance of this portfolio on a weekly basis. So I thought I'd do the initial weekly video and start at week 0. So start at scratch, start at 0, where all the profit and losses of all my companies within this portfolio are set at 0. So let's get stuck into it, go through this fairly quickly. So I'm going to track this performance of this portfolio, and probably the best way to look at this is at the close on Friday, during the final auction. I bought all these companies at the final auction, and so all the profit and losses are at 0 when we started trading on Monday the 14th of December. So everything's at 0. I mentioned that a few times. So every week I'm going to do a video where I track the performance of this portfolio, and I also mention any changes I've made within the portfolio itself. I've made one small tweak, actually two tweaks. Well, one tweak and one buy. So because of the buy, I had to make a slight tweak because this is through CommSec, this watch list or this list. It's not really a watch list, it's more of a list. So it's through CommSec using their watch list thingy, whatever you call it. But unfortunately, that CommSec watch list thing only allows 35 companies within the list itself. Now, I had 35 companies before I bought the company I did on Friday, so that means I have 36 companies. So unless I create another list, I've made a slight little compromise and just taken Impellus out of the list, IMS. It's more of a highly speculative company than most other companies on this list. So I thought I'd just take it out. But I am looking for alternatives to CommSec where I can track a portfolio that has more than 35 companies. So if you do have an alternative, just leave a comment in the comment section and I'll have a look at those alternatives. The other thing I should mention is I have holdings in 3 accounts. So I have CommSec, Self-Wealth, and I am also tracking some of the holdings I have within my Net Wealth Super Accelerator Plus Super Fund, which is something I created about 3 or 4 months ago. So I've moved super funds from Australian Super Member Direct to Net Wealth Super Accelerator Plus. I was going to start a self-managed super fund, but I found the next best alternative was Net Wealth Super Accelerator Plus. I should get maybe commission from Net Wealth because I keep mentioning it. So I have those holdings in those 3 accounts. Probably should also mention I have $300,000 in cash at the moment, which I can deploy fairly quickly. So I do have offset money in my offset mortgage account. So my mortgage at 0, that's $180,000. And the whole point of having money in an offset account is I can deploy that money very quickly at the drop of a hat in case we do see a correction in the market. Will there be correction in the market? That's the other question. I don't know. I think there is an increasing, the higher the stock markets go, the better chance we're going to see another correction, simply because the state of the markets I really think need to be watched because there's an over-exuberance in the markets right now. And we're not only seeing the over-exuberance in the retail market, the retail sector, we're starting to see that in the professionals too. And I've noticed a lot of experts are really bullish about the performance of stock markets in 2021. And I think a lot of them do forget that pre-COVID-19, the economies of a lot of the world were fairly sluggish, and there's no reason to expect the economies of the world to expand significantly after the COVID-19. And the fact that we're going to see significant increases in debt, personal debt, business debt, government debt moving forward. There is a concern, and a sort of a contrarian play is what happened in Japan in the 1990s and 2000s. So, there is this thinking that Japan is always, 20, 30 years ahead of the rest of the world when it comes to technology. Maybe not that far ahead, but anyway, they are ahead of us in technology. Maybe they went through this potential sort of sluggish performance of the stock markets over a 20, 30-year period. Maybe they've already gone through that. And in that sort of scenario, it will become a stock picker's market. So if you are fully in ETFs, that means your ETF portfolios would not perform all that much unless you sort of had thematic ETFs like Hack or Fuel or something. Anyway, So I'm pretty sure that at least in some point in the next 5 years or so, there will be a correction. But of course, the timing is difficult. If you can't time it, it's going to be hard. I was much more certain about correction in January, February this year. And it just happened too quick for my liking, and the recovery happened way too quick for my liking. So I had to deploy a lot of my cash when I wanted to be holding and increasing my cash levels. So I've made one buy on Friday, the 11th of December, and that is CSL. So I've added 13 units to the portfolio of CSL. And the reason I decided to add CSL, I was hinting at buying CSL a few videos before this, was they did an announcement about the abandonment of the vaccine, or COVID-19 vaccine with the University of Queensland. The market did take a did punish CSL slightly. Share price went down 3%, which I didn't understand because this was a very short-term thing. It wasn't going to impact the finances of CSL, especially the financial years moving forward. It doesn't really impact CSL at all. So I think this was an overreaction by the market. And I thought when you see an overreaction by the market, it's a good time to buy. I've held CSL in the past. If you don't know, I held it way back when it was like $50 or so. I sold it like $80, thinking I was a genius, selling it at a profit. And then it just kept going up. So I think CSL is a really core holding in this portfolio. I more than likely won't sell this moving forward. And more than likely, I might even add to my holdings of CSL, especially if there's weaknesses in the share price. So the fun thing I'll do is just do a one-day performance here. So this is what I'm going to do, sort of a hint at how I'm going to do on a weekly basis. So this is the week 0+1 performance. And good news is that the overall market went up about 0.2%, and my portfolio in this went up 0.436%, thanks to Peninsula and Ares Resources. We saw really good performance in those two companies. Peninsula went up 13%, Ares Resources 8%. Even A2 Milk went up 0.8%, which was a good hit to the performance. Not hit, good, yeah, whatever. Amber Tech went down to 13%. That was some trading right at the end. A very low liquidity holding that, so the share price can move up and down 13% with like 1,000 shares traded. So not too concerned about that. MSG has been going through a bit of a bull run lately, so not concerned with that. So overall, a good performance on day one. So it's outperformed the market by double. It's also outperformed my momentum sentiment portfolio. So that's on a one-day basis. If that can continue, that would sort of ease some of the fears I have that my other portfolio actually is outperforming this portfolio. So this by day one performance. I'm not going to do a day-by-day tracking of this portfolio. I was actually thinking of doing a monthly tracking of the portfolio, but I think it's just a weekly performance because that's less time. Anyway, that's all for today. Have a good day. If you are thinking I'm giving you any advice, make sure you don't take my advice as advice because I can't give you advice because I'm not professional. If you do need advice for your own financial circumstances, make sure you seek out someone who is qualified. That's all for today. I've got to leave soon. Go to work. Bye.